Hello, greetings. Now, being that you understand now how you can be able to get the real institutional order flow in regards to the seasonal tendencies and the COT, I would also like to draw attention to the market maker business model because it's something that have to occur in my trading, and you can as well use it to confirm your directional stance. Now, the market maker business model can be abbreviated as MMXM. By this M stands for the market, this one maker, then this X can be substituted for either the buy or sell, then this last M stands for the model. So market maker in the buy or sell model. Now we have the market maker buy and the market maker sell model. It's called the market maker business model or the market maker buy or the sell model because you'll not be focusing on one side of the marketplace. And in as much as you want to be focusing on one direction or standpoint, at least there is something behind that must be able to be confluencing that particular move. Are you on the buy side of the curve? Are you on the sell side of the curve? Now, there are three things that are important on the market maker business model, in as much as the fractal has a lot of things, but there are three things that are important. The three things are the original consolidation, smart money reversal, and the clearing of the original consolidation. Now, these are the three important elements: the original consolidation, you have the SMR, which is the smart money reversal, and the clearing of the original consolidation. The market maker business model is fractal in nature, and it is applicable in any time frame. Now, the original consolidation, it doesn't mean that it has to be a clear range or a clear consolidation. It is an area that houses either the buy side or the sell side liquidity pool. The smart money reversal, as the name is a point of reversal. And the clearing of the original consolidation is whereby the original consolidation in the form of the buy side or the sell side liquidity pool is taken out. And these are the patterns. Now, this is a market maker buy model. It's called a market maker buy model because you're focusing to be on the buy side of the curve, or rather looking for bullish price action. And I want you to understand that this pattern is fractal in nature. It is applicable in any time frame. So you work within the premises of the time frame whereby you'll be able to see it. Now we can't confirm that this is a buy model until at least the smart money reversal happens. The same way, you want to confirm a sell model until the smart money reversal occurs. Now, initially, the market will be able to give us this particular origin. And this particular origin can be called the original consolidation. And it doesn't mean that it has to be in a clear consolidation. The idea, it can be even formed with a single swing point. The idea, it houses the liquidity pool. For this particular case, it is the buy side liquidity pool. Then the market will be able to form these red levels. Now, these mid levels, they are of no use to us. We don't use these mid levels, of course, but you can be able to, gauge the likely area whereby retracement or reaccumulation stages can happen. So for now, you don't bother. So the market will be able to give us this red zone, which is a low risk sell. These mid levels can be 1, can be 2, can be 30, can be 50. The numbers don't matter actually. So it will be able to give us this particular low risk sell. It can choose to give us another redistribution. The number, the levels don't matter. But the three things that matter are the original consolidation, smart money reversal, and the clearing of the original consolidation. These mid levels doesn't matter. And you can be able to see this one. This area is higher than this one. So point of origin, original consolidation, which houses the buy side liquidity pool. Then the market will be able to give us a low risk sell, another redistribution, other redistributions. The levels, that doesn't matter. Then the market will be able to give us this gray area, which is the smart money reversal. We don't do anything at the smart money reversal. Now, the smart money reversal should be able to happen at a higher time frame. Not exactly at a higher time frame because this pattern is fractal in nature, but it should be able to happen at a significant PDRA. So we don't do anything at the smart money reversal, and it's in a gray area. we wait at least for price to break above this particular structural high for us now to be on the buy side of the curve, with then special that the market will be able to run above this particular point of origin in the form of the buy side liquidity pool. Now, at this particular smart money reversal, you can as well, for you to be having a better extra confidence, you can use the smart money divergence technique to compare the lows for bullish divergence, but it's not a must. But if it's there, it's really highly probable that you'll be able to be on the buy side of the curve with anticipation that the market will be able to clear this particular original consolidation. Now, the best reversal, of course, it's not a must. The best reversal is when liquidity is taken out and it initiates a break of structure. So after smart money reversal, will be able to give us low risk buy and accumulation. These mid levels, of course, like I mentioned, for this particular stage, they are of no importance. But later on, you'll be able to be anticipating buys at this particular stage by using the OTE, and when you grade our swings from the origin and the terminus, we divide into 4 quadrants to be able to give us potential areas that the buys can happen, or for a sell model, or by the sells can happen. This is a sell model, market maker sell model. It's called a sell model because we're focusing on the sell side of the curve with the anticipation that the market will be able to run below now this particular original consolidation. The same explanation applies for the sell model, how I did it on the buy model. You just flip everything all together. The original consolidation, smart money reversal, and the clearing of the original consolidation. And this particular pattern as well is fractal. It occurs in any time frame. So you utilize the realms of this time frame that you've worked upon. Now you remember I shared a chart on GBPUSD, and the chart was this one, but before the market retracted at this particular fair value gap over here. Now basically it was direct, and we are on the sell side of the curve. This is the original consolidation, and like I mentioned, it doesn't have to be in a clear consolidation. It can be formed even with a single swing point. So this is the original consolidation in the form of the sell side liquidity pool. We have the smart money reversal that happened at a significant point of interest, and the best reversal is when liquidity is taken out, and maybe what should be able to follow thereafter is a break of structure. So there is this particular bearish order block on the daily time frame, this particular big beefy green candle. It's a bearish order block. If I drag this, I'll be able to see that the market retracted off from that particular bearish order block. And before reacting, you saw it took out this particular high, it took out this high. So it broke structure as it dived into a significant premium array. We sell at a premium market and buy at a discount market. Now, in as much as the market gave us the sell model, of course it was blending well with whatever I discussed in the previous video, whereby everything is coming in agreement. Number one, you saw that the COT hedging program on the dollar, they were suggesting higher prices. And of course, the 5-year pattern on the seasonal tendencies was also suggesting higher prices on the dollar. So when the dollar is bullish, you're anticipating bearish price action on these particular foreign currencies. And you can be able to see this one presented a nice market maker sell model, by this one being the point of origin as the sell side liquidity pool, SMR, smart money reversal, so anticipating the clearing of the original consolidation. Now we can be able to be getting different criteria on the the mid levels can present. So original consolidation, low risk buy, reaccumulation, smart money reversal, low risk sell, redistribution, and it consolidated, broke the consolidation low, gave us another phase of redistribution, and another one is presenting itself here, and we're anticipating the clearing of the original consolidation. Now whenever the original consolidation is taken out, we offset our positions, because we never know if the market will be able to take it and continue to the downside or give us a reversal. But we'll be able to be tracking also the bigger picture of whatever I discussed to see if the market is presenting, overlaying maybe weakness to the downside, so that we can be able to be looking for other setups to unfold. So can be able to see this as a clear, nice market maker sell model. And if I lay it side by side, you can be able to see that initially we were on the buy side of the curve. It's called the sell side of the curve because we're anticipating, or we're focusing our attention on the sells, with the anticipation that the market will be able to run below the original consolidation or the liquidity pool. So buy side of the curve initially here, but we're now on the sell side of the curve. So on the sell side of the curve here, with the anticipation that the market will be able to trade below this one. And mark you, this is the daily time frame. It doesn't mean that we just enter off of the daily time frame. Of course, there are specifics. Wait for time and price to come in agreement for us to have the executions. So, and of course other elements that tend to be framing my signature module. So this blue level and the red levels are these particular mid levels, of which for now don't focus your attention on it, don't peg your attention on it. Now this is Euro card and it's on the weekly time frame. You can be able to see that the market is presenting a nice market maker buy model. It's a buy model because we're focusing on the buy side of the curve, with the anticipation that the market will be able to run above the point of origin here, the original consolidation over here. So original consolidation, these mid levels, like I said, they don't matter how many will be able to be formed. Low risk sell, redistribution before we have the smart money reversal, reaccumulation, sorry, low risk buy, and now it is giving us reaccumulation phase for us to have energy to push to the upside for it to take the original consolidation. So these are the three important elements that are worth in regards to the market maker buy or sell model. And like I said, it can even give you the better confluence of which side of the marketplace you should be able to focus your attention to. So I'm wishing you good luck, and understand that this pattern is fractal. It's applicable in any time frame. I'm wishing good luck. Have a wonderful rest of time. Talk to you in the next video. Bye bye.